Assalamualaikum, my name is Nur Ida Zulaika binti Muhammad Razan. My matrix number A24B3714. Today, our group would like to present about financial management for two companies, which is Aeon and Mr. DIY. So now, I will explain introduction on this financial statement report is to focus on the business nature of the two public company. The aim of this report is to calculate the ratio analysis, horizontal analysis, vertical ratio analysis, and recommendation for the both companies on how to improve their organization. Fantastic! Our group have done decide to choose Aeon Company Berhad and Mr. DIY Group Berhad. The two company have found at the website Bursa Malaysia. We have downloaded the three most current year of the annual report for both company, which is 2021 year, 2022 year, and 2023 year. The two company is coming up with the positive value and profitable result in the three current year. By obtaining the right ERP system specific industry, we will be proficient in the meeting industry demands by alternatively increasing the profit, satisfying customer, and ultimately improving productivity.
Assalamualaikum madam, my name is Nur Nabiha binti Romzi. My matric number is A23A1495. I want to present about business nature Aeon. First, business diversification with a core focus on retail. Aeon is a global company based in Japan, primarily focused on retail operation, including supermarket, hypermarket, convenience store, and shopping centers. And beyond retail, Aeon is active in financial service, credit cards, loan, insurance, and real estate development. Second, global expansion with localized offerings. Aeon has a strong global presence, particularly in Asian countries such as China and South Asia. Its products and services are tailored elegantly with local customer preference, ensuring relevance in diverse markets.
Business nature of Mr. DIY. The first one is Mr. DIY is a leading retail chain offering a wide range of affordable product, including DIY item, home improvement good, and lifestyle essential, catering to the diverse customer need. With a diverse product selection, Mr. DIY caters to a wide range of customer, including homeowner, small business owner, and those seeking essential daily product at reasonable price. Second is the company operates through both physical store and in online platform, with a growing presence in Malaysia and Southeast Asia, providing value for money and high quality product at competitive price.
Assalamualaikum Madam. My name is Nur Iman Nadirah binti Abdurrahman. My matrix number is 82382155. Today I would like to present about horizontal analysis of Aeonco and Berhad. For the liquidity ratio, graph 1.0 shows the current ratio for Aeonco and Berhad. In the year 2021, it has recorded 0.51 and decreased to 0.50 on the year 2022. A further increase to 0.51 on the year 2023. Despite the decline in 2022, the trend shows a positive recovery in 2023. Next, graph 2.0 shows the quick ratio for Aeonco and Berhad in 2021 was recorded at 0.18, which remained consistent in 2022 at 0.18. However, in 2023, the quick ratio decreased slightly to 0.14. For the graph 3.0, the net working capital of Aeonco and Berhad in 2021, the net working capital recorded a negative value of 921,323, showing an improvement compared to 2022, which recorded a negative value of 966,363. In 2023, there was a significant improvement, with the net working capital increasing to a negative 730,338. For the next slide is activity ratio. Graph 4.0 in 2021, the inventory turnover was recorded at 6.04, which slightly increased to 6.84 in 2022. A further improvement was observed in 2023, with the inventory turnover reaching 7.46. Next, graph 5.0 in 2021, the accounts receivable turnover was recorded at 27.74, showing a significant increase to 44.25 in 2022. However, in 2023, the turnover slightly decreased to 42.10. Next is graph 6.0. The fixed asset turnover in 2021, it was 0.73, increasing to 0.93 in 2022 and remaining consistent in 2023. The improvement from 2021 to 2022 reflects better utilization and fixed asset to generate revenue, with the company maintaining its efficiency in 2023. Graph 7.0 total assets turnover in 2021, it was 0.62, increasing to 0.76 in 2022, reflecting improvement asset utilization. However, it slightly declined to 0.73 in 2023. Next slide is the leverage ratio. Graph 8.0, the debt ratio for Aeonco and Berhad, shows a gradual decrease from 0.70 in 2021 to 0.67 in 2022, and further dropping to 0.64 in 2023. Graph 9.0 shows a decrease in the debt-to-equity ratio for Aeon Group and Berhad from 2.36 in 2021 to 0.67 in 2022 and further to 0.64 in 2023. Graph 10.0 in 2021, the ratio was 2.01, indicating a moderate ability to cover interest expense, suggesting some financial risk. The ratio improved significantly to 2.82 in 2022, reflecting better profitability or reduced interest costs and a stronger ability to meet interest payments. In 2023, the ratio slightly declined to 2.78. Next slide is the profitability ratio, graph 11.0 in 2021. The net profit margin was 2.35%. In 2022, the margin increased to 2.69%, suggesting improved profitability as the company was able to generate a higher profit relative to its sales. The margin further improved in 2023 to 2.78%, indicating continued growth in profitability. Graph 12.0 in 2021, the ROA was 1.45%, indicating that the company generated 1.45 cents of profit for every unit of assets. In 2022, the ROE improved to 2.05%, reflecting better efficiency in using assets to generate profit. The ROE further increased to 2.19% in 2023. Graph 30.0 in 2021, the ROE was 4.89%, indicating a relatively strong financial performance. However, in 2022, the ROE significantly dropped to 2.05%, reflecting a decrease in the company's ability to generate profit from its equity. In 2023, there was a slight recovery with the ROE rising to 2.19%, though still considerably lower than the 2021 figure. Next is the market ratio, graph 40.0 in 2021. The EPS was 0.06, indicating a relatively modest earning per share. In 2022, the EPS increased slightly to 0.08, suggesting an improvement in the company's profitability. The EPS remained the same at 0.08 in 2023. The data reflects a steady increase in EPS from 2021 to 2022 with stability in 2023. I have finished my part, so I will give it to the next person.
Assalamualaikum madam, my name is Nona Bia binti Romzi. My metric number is A23A1495. I want to present about horizontal analysis Mr. DIY Group and Berhad. Graph 1.0 show Mr. DIY Group current ratio 2.01 2021, 0.91 2022 and 2.23 2023. The recovery in 2023 reflect better financial management though a ratio below 1 indicate challenge in maintaining short-term liabilities. And next, graph 2.0, the quick ratio for Mr. DIY Group and Berhad declined from 0.62 in 2021 to 0.38 in 2022 before recovering slightly to 0.54 in 2023, remaining below the ideal level of 1.00 and highlighting potential liquidity challenge. Graph 3.0, the company working capital increased from RM545,890 in 2021 to RM655,2 CA in 2022 and RM787,985 in 23. Demonstrating steady growth, improved liquidity and stronger financial health to meet short-term obligation. Graph 4.0, the company inventory turnover ratio dropped from 4.5 2021 to 3.6 2022, indicating slower inventory movement and potential inefficiencies. It improved to 4.0 in 2023, reflecting better inventory management and alignment with demands. And graph 5.0, the company account receivable turnover ratio improved from 20.5 2021 to 29.67 2022 and 40.88 2023, reflecting faster receivable collections and enhanced liquidity. This suggests improved credit policies, efficient collection practice and stronger financial management. Graph 3.0, the business asset turnover ratio for Mr. DIY Group and Berhad declined slightly from 2.09 in 2021 to 2.05 in 2022 and 2023, indicating stable but slightly reduced efficiency in generating revenue from fixed assets over the 3 years. And graph 7.0, the total asset turnover ratio for Mr. DIY Group and Berhad fluctuated slightly, decreasing from 1.25 in 2021 to 1.20 in 2022 before improving to 1.23 in 2023, reflecting a stable performance with minor change in asset utilization efficiency. Graph 8.0, the debt ratio for Mr. DIY Group and Berhad decreased slightly from 0.57 in 2021 and 2022 to 0.51 in 2023, indicating reduced realization on debit and a gradual shift toward lower financial risk and stronger equity positioning. And graph 9.0, the debt to equity ratio for Mr. DIY Group and Berhad declined from 1.35 in 2021 to 1.32 in 2022 and 1.03 in 2023, reflecting reduced financial leverage, improved stability, and a stronger equity base, signaling a shift toward a more balanced capital structure. Graph 10.0, the time interest earns ratio for Mr. DIY Group and Berhad improved consistently from 10.64 in 2021 to 11.07 in 2022 and 11.64 in 2023, indicating strengthened financial performance, reduced default risk, and enhanced ability to meet interest obligations. Graph 11.0, the net profit margin for Mr. DIY Group and Berhad fluctuated slightly, dropping from 12.80% in 2021 to 11.87% in 2022 before reverting to 12.86% in 2023, reflecting improved profitability and effective cost management after a temporary dip. And next, graph 12.0. The return on asset ROA for Mr. DIY Group and Berhad declined from 15.99% in 2021 to 14.23% in 2022 before improving to 15.79% in 2022, indicating a recovery in asset profitability and effective asset utilization after temporary dip. Graph 13.0, the return on equity ROE for Mr. DIY Group and Berhad declined from 37.58% in 2021 to 33.01% in 2022 and 32.13% in 2023, reflecting strong but gradually decreasing returns on shareholder equity. Graph 14.0, the earning per share EPS for Mr. DIY Group and Berhad fluctuated over 3 years, decreasing from 0.07 in 2021 to 0.05 in 2022, before recovering to 0.06 in 2023, reflecting resilience and a gradual recovery in profitability despite challenges.
Assalamualaikum, madam. My name is Minur Safinas binti Wan Muhammad Zaid. My numeracy is A23A1860. I would like to present my part is vertical ratio analysis. Current ratio of Mr. Jaiwa Group and Berhad is in the year 2021 is 2.01, which is higher than Aeon Co and Berhad, which is 0.51. Current ratio of Mr. Jaiwa Group and Berhad in the year 2022 is 1.91, which is higher than Aeon Co and Berhad, which is 0.50. The current ratio of Aeon Co and Berhad in the year 2023 at 0.51 indicate insufficient asset to cover its short-term liabilities, reflecting weak liquidity in contrast. Mr. Daiwa Group and Berhad with a ratio of 2.23. For quick ratio of Mr. Daiwa Group and Berhad in the year 2021 is 0.62, which is higher than Ayonco and Berhad, which is 0.18. In 2022, Mr. Daiwa Group and Berhad is 0.3, which is higher than Ayonco and Berhad, which is 0.18. Ayoko and Berhad in the year 2023 with a quick ratio of 0.14 has very low liquidity and may struggle to meet its short-term obligations. More Mr. Dewa Group and Berhad with a ratio of 0.54. Net is net working capital. Working capital of Aeon Co and Berhad in the year 2021 is RM 921,323 higher than Mr. Dewa Group and Berhad, which is RM 545,819. Mr. Jaiwa Group and Berhad in the year 2022 is RM 655,268 higher than Aeon Co and Berhad, which is RM negative 363. Aeon Co and Berhad in the year 2023 has negative working capital of negative um, 713,000 and 338, indicating liquidity issue, while Mr. Daiwa Group and Berhad has positive working capital of 787,019 985, suggesting a stronger financial position. For inventory turnover of Aeon Co and Berhad for the year 2021 is 6.08 higher than Mr. Dewa. Group and Berhad, which is 4.5 for the year 2022. Aeon Co and Berhad is 6.84 higher than Mr. Dewa Group and Berhad, which is 3.6. Aeon Co and Berhad with a turnover of 7.46 sells and replenishes its inventory quickly, indicating efficient management. Mr. Jaiwa Group and Berhad with a turnover of 4.0. Account receivable turnover. Account receivable turnover of Mr. Jaiwa Group and Berhad for year 2021 is 20.05, lower than Yoko and Berhad, which is 27.74 for the year 2022. Mr. Dewa and Berhad is 29.67, lower than Ayonco and Berhad, which is 44.425 in year 2023. Ayonco and Berhad with a turnover of 42.10 times collects receivable faster than Mr. Dewa Group and Berhad, which has a turnover of 14.88. For the fixed assets turnover, fixed assets of Ayan Co and Berhad for the year 2021 is 0.73, lower than Mr. Dewa Co and Berhad, which is 2.09. In year 2022, Ayan Co and Berhad is 0.93, lower than Mr. Dewa Co and Berhad, which is 2.05 in year 2023. Ayan Co and Berhad with a ratio of 0.93 use its assets less efficiently, while Mr. Dewa Co and Berhad with a ratio of 2.05. Total asset turnover. Total asset turnover in the year 2021 for Mr. Dewa Co and Berhad is 1.25, higher than Aeon Co and Berhad, which is 0.62. For the year 2022, Mr. Dewa Co and Berhad is 1.20, higher than Aeon Co and Berhad, which is 0.76. In 2023, Aeon Co and Berhad with a ratio of 0.679 use it asset less efficiently, while Mr. Dewa Group and Berhad with a ratio of 1.23 utilize its assets more effectively. For DB ratio of Mr. Dewa Group and Berhad in year 2021 is 0.57, which is lower than Aeon Co and Berhad, that is 0.70. For the year 2022, Mr. Dewa Group and Berhad is 0.57, which is lower than Aeon Co and Berhad, that is 0.67. In year 2023, Ayoko and Berhad with a ratio of 0.64 times has higher financial leverage and more risk, while Mr. Jaiwa Group and Berhad with a ratio of 0.51. Debt to equity. Debt to equity of Aeonco and Berhad for year 2021 is 2.36, higher than Mr. Dewa Group and Berhad, which is 1.35. For the year 2022, Mr. Dewa Group and Berhad is 1.32, higher than Aeonco and Berhad, which is 0.67. In year 2023, Aeonco and Berhad with a ratio of 0.64 has a moderate debt, while Mr. Dewa Group with a ratio of 1.03 has more debit than equity, indicating higher financial risks. Next is time interest. Time interest of Mr. Dewa Group and Berhad for year 2021 is 10.64, higher than Ayanco and Berhad, which is 2.01. For the year 2022, Mr. Dewa Group and Berhad is 11.07, higher than Ayoko and Berhad, which is 2.82. In year 2023, Ayoko and Berhad with a ratio of 2.74 can cover its interest expenses moderately, while Mr. Dewa Group and Berhad with a ratio of 11.64. Net profit margin. Net profit margin Mr. Dewa Group and Berhad for year 2021 is 12.80%, higher than Ayonco and Berhad, which is 2.35%. For the year 2022, Mr. Dewa Group and Berhad is 2.87%, higher than Aeon Co and Berhad, which is 2.69%. In year 2023, Aeon Co and Berhad, with a margin of 2.78%, has a lower profitability, while Mr. Dewa Group and Berhad, with a margin of 12.86%, has higher profitability. Return on asset, Mr. Dewa Group and Berhad for year 2021 is 15.99% higher than Ayoko and Berhad, which is 1.45%. For the year 2022, Mr. Dewa Group and Berhad is 14.23% higher than Ayoko and Berhad, which is 2.05%. In year 2023, Ayoko and Berhad, with an ROA of 2.20%, is less efficient, while Mr. Dewa Group and Berhad, with a ROA of 15.79%, is more efficient in utilizing its assets. Return on equity. Return on equity, Mr. Dewa Group and Berhad for year 2021 is 37.58%, higher than Aeon Co and Berhad, which is 4.89% for the year 2022. Mr. Dewa Group and Berhad is 33.01% higher than Ayoko and Berhad, which is 2.05%. In year 2023, Ayoko and Berhad, with an row of 2.19%, shows lower efficiency, while Mr. Dewa Group and Berhad, with a row of 32.18%, demonstrates higher efficiency and profitability. A higher row indicates better use of equity. The last one is earning per share. Earning per share of Mr. Dewa Group and Berhad for year 2021 is 0.07, higher than Aeon Co and Berhad, which is 0.06. For the year 2022, Aeon Co and Berhad is 0.08, higher than Mr. Dewa Group and Berhad, which is 0.05. In year 2023, Aeon Co and Berhad, with an EPS of 0.08, is more profitable per share than Mr. Dewa Group and Berhad, which has an EPS of 0.06. Higher EPS indicate better profitability. That's all from me.
Hi and Assalamualaikum. My name is Nurul Huda Ifah binti Muhammad Rofi. My matric number is A23A1458. My part is recommendation to improve Aeon.co.m PhD organization. First point is to increase the involvement of staff. To increase its revenue and brand loyalty, Aeon should focus on customer engagement strategies such as Aeon enhancing loyalty programs to encourage repeat purchases and reward high value customers. Second point is Aeon should increase profit. Aeon should diversify its product by introducing on labels product with higher profit margins. Third point is digitize the business by expanding e-commerce capabilities by improving the online shopping experience through website and mobile applications. Another recommendation is reduce short-term liabilities. Aeon company can renegotiate with supplier to obtain longer payment terms.
So I am Anis binti Rosli and my metric numbers is 823A1828. So my part is recommendation to improve their organization in Mr. DIY Group. So the first one recommendation is optimize inventory management by implementing more sophisticated system to reduce the problem of overstocking and understocking. This is because a more sophisticated system will solve the problem of human error. The second, Mr. DIY company can send highly capable workers in industrial training to strengthen their skill. This is because a well-trained workforce can increase operational efficiency, reduce errors, and improve customer interaction, leading to higher retention rates and stronger brand loyalty. And the last one is focus on enhancing quiet ratio. This company can increase cash and cash equivalent by increasing cash flow.
Hi, my name is Siti Nurali binti Ahmad. My number matric is A23A1896. Next, I will explain about the advices for company on the sources of fund that is the most suitable to meet their objective. The first advice is debt financing. It's suitable for company with strong cash flow and control debt ratio. The advantage are it does not involve dilution of earners' equity and debt interest is tax deductible. For Aeon, the debt ratio has shown a decline in recent years, reflecting a cautious approach to leverage. This leaves room to take on additional debt to finance expansion. Meanwhile, Mr. DIY, the debt to equity ratio is lower, indicating the potential to use debt financing without high risk. Next, the other advice is equity financing. It's suitable for companies that need long-term capital and are ready to liquidate ownership. The advantage are there is no repayment obligation like debt and lower financing risk. Both Aeon and Mr. DIY can issue new shares, especially if their financing performance is stable and attractive to investors. Besides that, the other advice is internal financing. It is the best choice for companies with good profit and accumulated surplus. The advantage is it do not have additional risk from debt or equity dilution. For Aeon, the increase in net profit margin over the past few years also made it a suitable candidate for internal financing. Meanwhile, Mr. DIY have high return on equity and strong net profit margin indicate the potential to raise profit for investment. After that, the other advice are government grants or subsidies. It's suitable for companies looking to invest in sustainable project technology or community development. The advantage for this advice is funds do not need to be repeated. Aeon and Mr. DIY Group can take advantage of grant for a sustainable initiative or expansion into rural area, such as the Mr. DIY Express format. The last advice are put of the companies can use a combination of debt financing and internal financing to minimize risk and maintain financing flexibility. For Aeon, with potential leverage, can explore debt financing or hybrid instrument. Meanwhile, Mr. DIY with stronger financial performance may be more suitable for internal financing or government grant. After that, the other advice are government grants or subsidies. It's suitable for companies looking to invest in sustainable project technology or community.
Back to me, Nur Ila Zulaikha binti Muhammad Razai. I will continue the conclusion. To sum up, since we were comparing the two companies, commercial companies and horizontal analysis, we could conclude that Aeon Company Berhad was the lowest proportion compared to Mr. DIY Group Berhad. In 2021 and 2023, Aeon Company Berhad current ratio was the highest in the 3 years, 0.51 times compared with 0.50 times in 2022. In 2023, Mr. DIY Group Berhad current ratio was the highest in the 3 years, 2.23 times, while in 2021 at the 2.01 times. Then it was the lowest, 1.91 times at 2022. Vertical analysis Aeon Company Berhad obtained a lower ratio compared to Mr. DIY Group Berhad in the 3 years. We also explained the findings of 5 financial ratios studied by Aeon Company Berhad and Mr. DIY Group Berhad from 2021 to 2023, namely liquidity ratios, activity ratios, leverage ratios, profitability ratios, and market ratios. In terms of liquidity ratios, it showed that in places with this cooperative, Aeon Company Berhad has a worse liquidity position than Mr. DIY Group Berhad. So it cannot be used to generate profit, which lead to the decline of the asset. Overall, ratio above 1.0 is considered sufficient and safe. In terms of leverage ratio, the study showed that the liquidity position of Aeon Company Berhad in the 3 years is worse because the company under higher risk, while Mr. DIY Group Berhad was still in good place. We able to turn up that Mr. DIY Group Berhad will be a better financial manager than Aeon Company Berhad because we will probably have a better ability to control the cost. The return on investment of Mr. DIY Group Berhad is better than Aeon Company Berhad. Last but not least, the market ratios show that the market valuation of Aeon Company Berhad is higher than the Mr. DIY Group Berhad as a result of